Right. Do you trade it through tech names, or do you look at some of the individual averages in this part of the world in particular, like Taiwan, like Korea, and even Hong Kong, despite the regulatory overhang?
Well, it really boils down to what the investor wants, what his risk appetite is, and what his expectations are. There are various ways to invest in tech stocks: buying individual names, buying ETFs, buying funds. But the bottom line is really this: that you need to have, some representation of your portfolio in the technology sector, because technology is here to stay. No doubt, rising interest rates will be a headwind, and will cause tech stocks to pull back from time to time. But if you take a medium-term view, I think technology stocks will still continue to do well, because the world we live in the next 10, 15 years, Matt, is going to be very different from what it is right now. And that will be driven primarily by technology. So you need to have money in that space.
You got it, Vasu. Hi, Dan here in Dubai. I wanted to ask you about the market outlook more broadly, because earlier on in the month, you were asking, is the equity rally over? Obviously, we haven't seen that come to fruition. We've been asking the same question, to be honest. But what do you think is going to happen next? And what do you see as the single biggest theme driving equity markets into next year and beyond? What are you looking at specifically that determines your investment strategy?
Okay, then we are not negative on the equity markets. We are moderately positive on equity markets at this juncture. Bear in mind that global equities have rallied 90% over the last 19 months. And so, you can't expect that sort of phenomenal returns to continue going forward. But the PE ratio for the world MSCI World Index is not extremely high. It's about one standard deviation above its 10-year average. So we don't have exorbitant pricing right now. We don't have irrational exuberance. In fact, we have a healthy level of skepticism in the markets, because if you look at US money market funds, 4.5 trillion sitting on the sidelines, indicating healthy level of skepticism. So liquidity is going to be a supporting factor for the markets. The reopening of economies as vaccination rates go up is going to be a supporting factor for the markets. And, I think essentially those factors, the improvement in earnings in economies, even though, growth will slow down, will all be supportive of the markets. But the returns going forward will not be as strong as what we have in the last 19 months. And investors are coming to terms with that. And, high single digit returns, low teens returns may be the order for the day going forward.
One of the other themes we've been looking at over the past few weeks is soaring commodity prices for the likes of oil and natural gas, for example. What do you think that's going to mean for some of the key commodity importers? And are we going to see significant cost push inflation here, perhaps ultimately impacting the investment outlook for emerging markets and the like?
Indeed, Dan, it's something that we keep at the back of our minds. It's something that we do monitor very closely and worry about as well, because, the Fed has taken a view that inflation is transitory, right? If you look at the Fed's latest forecast, it sees core inflation at, about 3.6% in 2021, falling to about 2% in 2022. So the Fed doesn't see inflation as a problem. And the same story with other central banks. They see it as transitory. So the sharp increase in commodity prices, coal, natural gas, oil, comes on the back of environmental factors, global supply chain disruptions, and the sudden surge in demand, with supply unable to keep up with demand. But hopefully, as we approach the second half of 2022, supply will normalize. OPEC will increase more supply. We'll see more natural gas being produced, and that will hopefully bring prices down. So our base case is not one where we see hyperinflation, stagflation. We see commodity prices leveling off in the second half of next year, but we don't see it crashing. We think that commodity prices will remain relatively elevated.